What's up, HyperFast Nation? On this episode of the HyperFast Wealth Show, we are coming at you from our studio down in Florida, still doing the remote virtual thing. And we've got an amazing guest on today. He has been in real estate for over 30 years, has experience in construction, being a broker owner of a national franchise. He's done investing. He's been a real estate coach. He has written 3 best-selling books. Right now, he's running a family-operated business doing anywhere from 2 to 5 deals per month, and then several more for his students. And he's got a very, very interesting investment approach on how to acquire properties, how to find really great buyers, and how to do it all while minimizing your personal risk. Welcome to the show, Chris Prefontaine. All right, welcome to the show, Chris. How are you doing today?
Awesome. How are you, Dan?
I'm doing great. And another beautiful day down here in Florida, out of the normal studio, of course, but running things very successfully virtually. How about yourself?
Yeah, same here. We actually pivoted about a year before COVID, so it was just obviously a lot more now, but it's easy because everybody's doing it, right?
Yeah, certainly. It is easier, and I'm glad that we were doing our coaching business and podcast, because I think all of that stuff that we've been doing for years really helped our real estate team and development business pivot naturally. So I'm sure we'll get into some of that stuff, what you're doing now, but let's catch up our listeners on what got you to where you are today. So just give us the quick couple minute background on who you are.
Yeah, I'll give you the high points because it's been a 29 and a half stretch. So I started building back in the early 90s. Then I bought a Realty Executives franchise. So I kind of put my broker owner hat on, never was a realtor. Sold that to Coldwell Banker in 2000, then started running with my own investments and coaching from 2000 up until the lovely crash. So after the crash, we got our head kicked in a bit in many ways, and then we're forced to re-engineer the business to kind of be the most recession resistant we could, which brings us to today, right? Nobody knew COVID was going to happen, but running into it, we buy everything on terms, and that means no banks. So running into it, we were doing great, and then when COVID hit, it like tripled the volume for us. So I'm thankful, knock on wood. So hopefully we can help a whole bunch of people right now.
What do you think you learned going through the recession in the 2008-9 period that's helped you today?
Well, the bank situation. I mean, nothing against bankers or banks, but we just don't use banks anymore. So I was signed on personally like 22 properties and or projects. And so when those went under, they came looking for the money like they can when you sign personally, right? So that's a headache and a half. And so now buying everything on terms, lease purchase, owner financing, I don't worry about that at night. We control 50 or 60 properties at any one time, not counting our students that we do deals with. And we are not on one loan. And so when this happened, it's a matter of some of them renegotiating, others, no care in the world. I can just keep going with them. So that was the biggest lesson for sure.
So now when you acquire a deal, the seller's financing it, securing it with the property, but not your personal guarantee. Is that what you're saying?
Yep. With owner financing, the seller takes a first position, and we don't sign personally. Our entity does. The building stands or the property stands on its own. And then with the lease purchase, the deed doesn't transfer. We put our own buyer in the property to cover everything, and we're paying on their behalf, their loan, until we cash them out. Even my building, we have an office building. I'm not there today. I'm at home with COVID, but we have an office building fully rented. Everybody's paying their rent through COVID, and we bought that on terms, no banks. And it's just great not to have to deal with them, frankly.
And how does for the people out there that don't do that, other than not being personally on the hook, like what else is different? Are the rates, terms, all that kind of stuff different or the same? Or?
Yeah, really cool question, because like with owner financing, there's niches within niches, right? We focus on free and clear property when I say owner financing. So free and clear property, there's probably in the United States about a third of the properties are debt free. That's a big number. And so these are people that are fun to deal with. They're easy to deal with. They want the best price, and they'll take monthly principal only payments, zero interest. Talk about a recession hedge. I mean, you are pounding down principal every single month. So over a course of 4 to 10 years, you are just in such a great position. Even if the market turns on you, you're in a great position. With the lease purchase, it's a little different. We are relying on the principal pay down because we're paying the underlying loan and we're benefiting from that. And then of course we mark the properties up. But both of those scenarios are well protected.
So you're on that lease purchase, like you have an agreement with the owner, just so everyone kind of understands, and you're going to lease it from them, but then you have the right to purchase it. Is that?
Yeah, how it works is you have the right to purchase it and sublet it. So then we turn around on all owner financing and all lease purchase. What do? We put in tenant buyers. We call them tenant buyers. They're buyers that need time, credit enhancement or down payment, further saving, or they're self-employed. They got great credit, they got down payment, but they're not getting a loan yet because they need some seasoning, some time to report to the government correctly. Those three categories of buyers now, they were always great, but now with COVID, the banks have just helped us tremendously by upping the bar a bit, as you know, for credit scores and everything else. So they can't go that route. They have to go our route and then eventually get mortgage ready again.
Are you finding, with the implications of businesses and whatnot, are you finding it harder or easier to get access to the right buyer tenant, for your properties or deals?
Much easier now because our ads call it out, like, having trouble getting a loan, can't get a loan during COVID. There are, as you know, people going to the closing table and getting denied who were previously approved and they're ready to close. Okay, so they got 50 grand they're going to put on this house. They have good credit or they wouldn't have been there, but the bar just got raised on them. And so they call us and go, look, I got a down payment and I'm all ready to go. And so these are great buyers, better than people that need credit enhancement. So every single deal, Dan, we're creating 3 paydays per deal. The down payment, the monthly spread, and then the back end cash out, which is 2, 3, 4, 5 years. And those average for us like 75 grand. These aren't, these aren't tiny deals,
And what's your deal pace been, historically, and then what has it been this year with COVID?
Yeah, so conglomerately with our deals, which is myself, my son-in-law, my son's family company, just in 3 states here, and the students deals, we were averaging like 15 to 20. Now we're 25 to 30 plus. The students deals alone have close to tripled just this month. So, I mean, the deal flow has increased because look, the sellers who were, I won't say cocky, but comfortable with the market. Now the buyers dried up because of banking, right? And in COVID, the quarantining. So then they had nowhere to turn. So we got these callbacks from people that weren't interested in terms before, like by the droves coming to us. Right.
So, I mean, you kind of have this business that focuses on a niche seller, niche buyer, although it's not a small amount of sellers. If you're telling me a third of the buildings, potentially would be options. So it's a decent amount of people, but with the shift in banking regulations, hard money, even investors wanting to do deals, there's probably more sellers and buyers right now. So it's it's just interesting how some people, something happens, they retract, they get nervous. Seems like you've been able to expand.
Oh, from a coverage standpoint, yeah. I mean, look, at the beginning of COVID, Dan, I was saying people, it's like the fight or flight, and then a third one came into the picture, and that was freeze. So many business owners like froze. Take restaurants, not what you and I do, but restaurants, a lot of them rightfully so froze. Well, I heard a guy, I was listening to a Dan Kennedy virtual event. I heard a guy that absolutely tripled his business during this because he started figuring out how to serve families and businesses with takeout. Like day one, he was doing that. So there's always a route. I know people have it tough right now, but there's always a route if you look for it.
Yeah, I agree. I mean, we saw that in our market where like really good restaurants just shut down overnight, and for some reason, some of them waited a month or two to like start offering takeout and other options, and other people like jumped on it right away.
Yeah.
And I'm sure it's kind of like the same in all industries, really. The people that can recognize the shift and make the adjustments the quickest are going to be the ones left standing at the end of this.
Well, I think that goes for career-wise too, right? All I'm hearing is people are getting paid more to stay home and not work. But then at the same time, like this week, so it's fresh in my brain, we have corporate career people, been in, say, banking or insurance for 25 years. 2 people this week called us more from the student coaching side and said, look, I'm done with going to the city. I'm done with corporate. Teach me how to become one of your students who you do deals with. Like, that's changed a lot all of a sudden. People want to stay home. They're getting a taste for, oh, it's cool. I can stay home with my kids or whatever,
So the, your acquisition pace has picked up. What about the coaching pace? Have more people been been reaching out to you and for coaching, or trying to figure out how you're doing it, or what's that?
Yeah, 2 levels there. One is the corporate level I just mentioned, like they're making a major career change. That's a new twist. I called my son out this morning. I said, that is definitely what I'm sensing right now. People are calling our company and going, teach me how to do it. And not just teach me how to do it. Like, I want to do it aggressive and I want to do it tomorrow. Like, this is a career move for me. I'm not tinkering with this. And then within our community, we've got different levels of involvement with us where we do deals with them. So you had some people that were tinkering there too, like part-time and happy with part-time because they had good jobs, who got sent home during this and went, done, that's my ticket. I am going full-time. And so they're up in their involvement with us. So we're seeing it from all fronts, which is great. It's fun.
How, just so people know who are listening, how does your coaching program work? Who are you, looking to help, and how to, let's dive into that for a little bit.
Yeah, we help brand new investors like the 2 I just told you this week, corporate, going, okay, I like real estate, never really did it. Tell me how to do it. And then we have, during COVID especially, a lot of like wholesalers and flippers calling us saying, look, I want to tack this onto what I'm doing, or I want to totally pivot because of seeing how it's thriving during the storm right now. So we got all different backgrounds. And age-wise, we got like 22 to 78, age-wise. So we run the gamut there too.
Yeah, see, it seems like it would be a good natural fit for a wholesaler because, those are guys that like finding great deals. They just don't like necessarily closing on them or getting the money to close on them. They're going to get their hit, get out. But with the structure you have, it seems like it would be like an easy first step for wholesalers to actually like close on their deals and benefit from longer term.
Rehabbers either learn it or they don't want to learn it and they refer us business because they'll get a lead, let's say for a rehabber or wholesaler, where there's just not enough spread. And if you get it on terms, you don't care as long as you have time. So yeah, it's a good add-on, tack on, or pivot if they're in COVID and they don't know what to do.
And what do you think most people's like their biggest fear or kind of hurdle they have to overcome with buying on terms is? Because I'm sure there's a lot of people that haven't heard about it or know what it is even.
Yeah. So as an investor, you mean, or the consumer investor?
Yeah, as an investor, like when they're trying to figure this out, like what's it like for that new guy, trying to figure it out and do it.
Yeah.
Like what are they scared of?
Probably 2 things. Good. I've been asked that. I think one would be fear of the unknown. So what do you do whenever you have that? Go find out someone who can show you how to do it, right? And then secondly is there's a belief thing. Like a lot of people say to me, well, how do you convince the seller to do, like, why would they do that? This has been since like forever since I've been doing this. And I say, you're not convincing anyone to do anything. Once you learn the scripts, you're actually just looking for their pain and helping them. We buy oceanfront homes that are debt free. We bought one from a realtor. People will go, well, why would a realtor do that? It's all you believe. You can go out and help them if you just have the right belief.
Right. And I mean, what is it for most sellers? Like what are the typical like pain points that they want, and how do you and your students solve those pain points? Like what kind of structures do you put in place to help them?
Yeah, a couple things come to mind. So it's pain and it's goal driven, meaning during COVID, are there going to be some pain points that we're going to have to go in and help people with because the forbearance is coming due or they lost their job? Yeah, those are unfortunate pain points. So we can take over their payments, buy it sub 2 or lease purchase. But there are also a lot of $1 million homes right now, a lot, that the jumbo loan buyer has been pushed up so high that you can't get someone to get in right now. They don't have 25%. They don't have a year reserves. It's crazy. So we have a lot of those people that are debt free and they just want to know that there's closure. Oh, you can still pay my price? Yes, if you can go out further with the unknown right now. And they go, sure. And we're tying those up right now. And those are great deals. I mean, if people learn what we do just to buy their own home, personally, it's a win. Never mind all the deals that are out there.
How do you go about identifying and finding these potential sellers or deals?
We fish in 3 ponds primarily, Dan. Expired listings that didn't sell with a realtor, and those are in hot markets and crappy markets always. For sale by owners, and then for rent by owners, because they're getting stung right now. But sometimes, even if not COVID, that you find a landlord that just gets burnt out, like I'm done. And so they would like the debt covered still, but to know that it's going to actually be an end sale is even better. So those are the 3 categories. And then the 4th would be if the students or us want to delve into other lead sources, it's the free and clear. You just buy a list of free and clear properties.
And on that, if you come in, you're going to take over a guy's payments. Are you typically just making the exact mortgage payment, and then you've got a certain time frame that you'll actually close on at some point, or what's like the nitty gritty on that?
Yeah, so let me give you an example of someone. You can give a million examples, but let me give you a lease purchase example of someone that has, let's just say it's you, and you and I agree that your house is worth about 300, but you weren't able to sell it. But we go, okay, we'll give you the benefit of the doubt, Dan, it's 300. And you say, okay, I owe 250, and my mortgage payment is $1,200. I say, okay, Dan, I'm going to find my tenant buyer, and that usually doesn't take too long because it's a plethora of them right now. Once I find my tenant buyer, let's say I find them in the month of July and they're going to take occupancy August 1. I say to you, the seller, 2 things. I'm going to start making your payment a month later, September 1, because mortgages are paid in arrears, typically. And on or before, whatever the term is, let's use 36 months for this chat. I'm going to pay off your loan, which won't be 250 anymore. It's going to be lower. That's to my benefit, and give you your 50 grand. So as a seller, all you care is, okay, I get my 50 grand if I can wait 3 years in this case, and my loan gets paid off. So that's you as a seller. And then me, I find a buyer with a down payment who is a buyer, not a renter wannabe, a true buyer that we qualify. And I get a down payment. That's my payday 1. And then your $1,200 mortgage payment I'm making, I'm probably going to get 15 to 18 from them, the buyer. So I get a spread, payday 2. And then in the end, I'm going to mark that $300,000 house up probably to $329,900. Just depends on the market, but for this example, and then get all the principal paid down. So that's where we come up with like 75 grand average. We have students as high as 250. I mean, it's some crazy deals.
And does that tenant buyer, do they know going into it that at the 3-year mark, I have the right to buy it at $329,000? Is it kind of like an option for them, or?
Well, it's an option, but they go in knowing it's a non-refundable down payment. So this is a buy contract. It's a delayed purchase. Yeah. So do all of them get to the finish line? No. I mean, you can see educators right now. You go on to YouTube and you'll see educators that say, yeah, do rent home with your buyers. And if they don't finance, it's okay. Do it again. Get another check. Okay. That may be right for them legally, but morally and ethically, it just stinks. So our philosophy is let's pre-qualify them all with a registered loan officer. Let's get a mortgage ready plan. And if that plan fits within that 3-year term in the example I gave you, good. Then we approve them. We set them up to win. But do families still have life events? Yeah. I mean, we had 2 during COVID. Luckily, all our tenant buyers, knock on wood, were great. But 2 of them during COVID got hit hard. And they just called and said, we got to leave. One was with a student. One was with us. And they leave. It's sad, but they got to leave. So they do. It does happen 2 to 5% of the time.
And who is the typical buyer then that'll go into this type of agreement, and how do you find that buyer?
Okay, so I'll answer the finding thing first because it's easy. It's all online. Rent links. We use Appfolio because we have our own properties, but rent links, Craigslist, all online portals. Because when you start putting out there, bad credit, okay, no banks to start, you get droves of buyers. So that's easy to find. As far as who they are, let's go pre-COVID. Pre-COVID, it was, I need credit enhancement. I can't get a loan without it, so I need time, and I want to lock in my price. Or I'm self-employed. I now found out from my bank I need 2 years of better tax returns because I wasn't reporting all my income. A lot of self-employed people can relate to that. And so we bring them in and give them 2 years to get qualified. And now during COVID, it's all those great buyers that got pushed out of the market just because they were on the cusp of the credit score thing, you know?
Right, and those have gotten harder, like you said. Do you always match up the times? Like if the seller is willing to do 3 years, but the buyer only needs 2, I'm sure you'll close it sooner. Or
Yeah,
everyone's probably happy with that.
yeah. You want to make it so if the example you and I talked about with 3 years, I want to find someone that the report comes back to me and says 18 to 24 months. Because you got to leave room for life to happen and delays and paperwork and blah, 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 you know? So yeah, we want to do that. But if we buy a house, let's say it's a 5-year term or a 7 or a 9, we say to the buyer, I know your qualifications came back and says 3 years, but no stress, take your time. And they love it because it's not like you're pushing. And in that case, I wouldn't really follow up with them for probably 3 or 4 years because I have time. Which is nice.
And I'm sure you'll build, make the price higher then if they get to wait longer. Is that
actually, you know what we pick up on that, Dan, is we pick up all that extra principal pay down.
Right.
So they still lock in their price and watch the market grow and grow like they're a homeowner, which is nice.
And the owner, I'm assuming, the original owner, they stay on that note, correct?
Yeah, you're right. They stay on it. Their name's on it. So whether it's a lease purchase or subject to purchase, their name stays on it. It's a matter of whether the deed changes hands or not. And then with owner financing, of course, we just create a note and they are the bank.
And do you have to make a deposit to the seller or anything like that, or is it
not typically?
It's just yeah. So you're really getting in with fairly low risk, and
it is. Yeah, it is. Now, as you ramp up and you start having your 3 paydays, accumulate and you can chop those out, would it be okay then to get a little more aggressive with a seller who might be behind a month or who wants payment now instead of 30 days because you have other paydays coming in and you'll get more equity because of the deal you make? Sure, we do some of that, but the model exists with no money down.
Yeah, I mean it's a really cool model for all the reasons we've kind of gone over, and I can definitely see how there would be a much bigger buyer pool right now. Just some of the banks that we've talked to, either for our own deals or for some of our buyer clients, like the requirements for some of them are just like insane. Like there was one bank on a deal that they wanted more in reserves than the home was actually worth.
I believe it, especially the high end.
And I remember telling the banker, like, if people could keep that in reserves, like, why would they bother with all the hassle of a loan? Like,
it's a little nuts. But listen, they're bankers. Okay?
Right.
They pay $30,000 to bust you, and it's their job. So just set your life up so you don't have to deal with banks. That's how you do this. It's pleasant.
Yeah, no, I definitely can see the advantage. I'm sure all your students do as well. You've got a couple like resources or books, I know we in a podcast as well, that I think would be good to mention, just in case people are hearing this and saying, I like what I've heard so far. I want to read more about it or listen to Chris weekly or get coaching or whatever. Like how should people do that, or what resources do you have available?
A couple things. I mean, they can go to the site, right? smartrealestatecoach.com. But what I said to you at the beginning of the show, I'd love to offer them, and that is if they just say they heard you and I chatting on your show, we'll give them the free books. We used to ship them, but obviously not now with COVID. We're out of the office, but we'll give them the free books. All they got to do is go to free, SREC book.com, and you'll get my bestseller, and there'll be some other electronic things in there, just some free gifts for hearing us on the show.
All right. Now, before we wrap up, we always do a HyperFast lightning round. If you are ready for some rapid fire questions.
Ready, man.
All right. What's the biggest piece of advice you'd give to a new investor?
Manage your expectations. There's just too much crap out there with courses promising overnight success. And if you go in with that attitude, you're going to be pissed off pretty quickly. So go in managing your expectations, no matter what niche you're going to attach yourself to. And my suggestion is 3 years. Commit 3 years.
Yeah, that's definitely a good one. People oftentimes quit too soon.
Too soon.
What's the biggest piece of advice you would tell someone right now in the market who's thinking about investing?
Okay, good. Latch on to someone who has gone through at least two major market cycles or storms like this. Like this in 9/11 would be storms and market cycles. That's so important right now because there's a lot of new money, new investor money that's been made post 2008, and it's different now, and they're learning that the hard way. So I would say make sure you're careful with that.
What's the biggest lesson you've personally learned during your real estate investing career?
08 by far. I mean, I got hit a few times, right? You do deals, you learn a lot of different things, but 08 and specifically not signing personally. And the other lesson during that was there's twice in my life that I got dinged in real estate. And if I look back, I didn't realize this till about a year or two ago. It was when I didn't have someone help me, like a mentor or a coach. That's pretty scary. So make sure you're always latching on to someone. Success leaves clues.
Yeah, I agree. If you are not, doing deals, coaching students, writing books on your show, where would people find you? What would you be doing?
Pre-COVID, travel with family. We're big on family trips. Post-COVID, time with family only. Yeah.
What are some of your most favorite family trips or places you've traveled?
Stowe, Vermont, Grand Cayman. Stowe's a drive, right? We're in New England, and Grand Cayman obviously is a flight, so I don't know when that'll happen again, but those are two that we like to frequent.
All right, and last one, where do you see yourself in 5 years?
We've got a pretty cool mission with the company, with my son-in-law and son coming up right, through the ranks and doing an amazing job. So we've got a goal. Our 5-year mission ends in 2022, actually, and it's to complete 1,500 transactions with students. So you see how driven that is about transactions, not sales of stuff, right? So that's what I'll be doing that from just the CEO seat. But until real estate gets boring, and I can't ever see that happening, we'll still be doing what we're doing right now. I love it.
And just so people know, like when your students do a deal, are you participating on like just a coaching kind of fee base, or do you take part in the deal at all, or how does that work for you?
Yeah, great question. We do have 3 different levels, and they all entail us doing transactions with them, which feeds that mission that I just mentioned. So different levels of our involvement and different levels of sharing, but they do rev share with us, and then they cap out. We call it capping out. Why? After a certain amount of deals, you get it. You've gone through enough nuances, and you don't need us in your life. And then at that point, we have a continuity program if they don't want to leave the family, so to speak. It's a really tight community.
Well, you've got interesting investment thesis and approach, interesting way of coaching, a lot of cool stuff going on. Before we sign off, I want to give you one more chance just to remind people how to get in touch with you or get the book or whatever you want, just so you can reach more people, help more people.
Yeah, I appreciate it, Dan. So the best is just go to smartrealestatecoach.com. There's a free webinar there. If you can deal with listening to me for another hour after hearing me with Dan, then take the free webinar and enjoy it. I want you to look at free before you decide what niche you want to go in. And our YouTube channel has over 100 deals. We show you exactly what we do.
All right. Well, check it out, guys. Thanks for being on the show, Chris. And thank you, everyone, for tuning in.
You bet, Dan. Thanks for having me, buddy.
Thank you for tuning in to this episode of the HyperFast Show. Subscribe to us if you want to make sure you get the latest and greatest HyperFast shows. And remember, we love reviews. Reviews help us bring better and better guests and improve our shows. So give us the good, the bad, and the ugly. We hope you enjoyed the show, and we will see you next time.
Hey guys, thanks for sticking around to the end. If you want to see more videos like this, click right here. And if you want 10 tips from Sunil and I on how we've built wealth through real estate, click right here to download them instantly. And if you're new to the channel, click below to subscribe and turn on post notifications so you don't miss out. And let me know in the comments what you think about the videos. I read them weekly and I pick winners at random, and I give out stuff like hats, shirts, coaching calls with me, and tickets to some of our events. I'll see you next time.